If you are a working professional trying to make some consistent income from the stock markets, you face one big problem. It's not possible to sit in front of the screen because trading definitely demands constant monitoring. But what if there is a strategy that can generate good returns while requiring very little screen time? In this video, I'll share one of the best option trading strategies for working professionals. A low stress, high probability strategy that helped me a lot to trade the markets even when I was doing a corporate job. And if it's good for working professionals, that doesn't mean it's not good for full-time traders. It works well for them also. I am talking about Iron Condor and I am going to show you exactly how to build it step by step. Also, we will see different aspects of it with some real adjustments. Just give me next 10 to 12 minutes of your focus and it will totally change your trading journey. Disclaimer, this video is purely for educational purposes. Options trading is risky, so no recommendations at all. Is there any solution to this? You need a low risk strategy that doesn't require you to sit in front of the screen. Kindly note, it is a low risk strategy, but not a no risk strategy. Let us learn the Iron Condor, one of the safest strategy in the options trading world. We will see step by step how to construct an Iron Condor because generally I have seen traders getting very confused about different legs. And it's a 4 leg strategy. Let's see what are the 4 legs. So out of 4 legs, 2 legs are call. One is a sold call and then there is a purchased call. Then there are two puts. One is a sold put and then a lower put is purchased. So these are the 4 legs in Iron Condor. We'll create it one by one. Let's see how to construct an Iron Condor step by step in a real life scenario. Please hit like button for better reach and visibility. Thanks for your valuable like. A very useful pro tip, always add your buying legs first, then add the selling legs. This ensures that we get the margin benefit immediately. So while doing it, first leg is we'll buy a call. In this case, it is purchased at a price of 114.5. So this is leg 1 of the Iron Condor. Then as a second leg, we'll sell 100 points lower strike. We are keeping a gap of 100 points only. See how the payoff diagram changes from bullish when it was only call purchase to bearish payoff diagram because we have sold a call which is having a higher price than the call which we purchased. As a third leg, we purchased a far OTM put. And finally, we sold 100 points above strike price put as a fourth leg. This completes our Iron Condor. Now this is one trade, this is one strategy having all 4 legs and this is the payoff diagram. You can pause the video for a few seconds and see all the strikes again for clear understanding. Margin required for this trade is approximately 70,000 to 71,000. So if we say 71,000, that means if we make 710 rupees, it becomes 1% on capital deployed. If we make roughly 1400 rupees, it becomes 2% on capital deployed. As seen in the payoff diagram, max loss in this trade is around 3500 rupees wherever the market goes. So it is a defined risk strategy. Wherever the market goes, max loss will not cross 3500 rupees. Maximum profit is around 4000 rupees, which means we have around 5.5% profit possibility on our capital deployed. So if 3500 is my risk and 4000 is my reward, so my risk reward is more than 1 is to 1. It is 1 is to 1.14. That means it's a good trade. And then in any Iron Condor, there will be two break-even points. So if market goes below 25347 or above 26254, this trade can definitely give loss. This gives us an approximate range of around 900 points, which is quite big. If market stays within this 900 points, there is definitely a profit. I know the Greeks would sound slightly academic, but here is all we need to know very quickly. First is this trade is more or less delta neutral the way we have constructed it. So we do not care if the market moves slightly up or down, it will not change much. Second is it's theta positive. That means every day that passes, money flows into our pocket just because time is running out. And finally, we are Vega negative. If the market settles down and volatility falls, that is also good. But if volatility goes up, that is not good for the trade. So why I am saying that Iron Condor is something like gold standard for working professionals? Let's see. First is we do not need to do much on day-to-day basis. We will only touch the trade for adjustments if any of our break-even points are threatened. Otherwise, no need to do anything. Capital requirement is relatively low. No kind of predictions is required whether market will go up or whether market will go down. And the best part is you can make money even if any of your directional analysis go wrong. Even if you have done any directional analysis, it has gone wrong, still we can make money in Iron Condor. And if you accumulate your monthly returns over a period of 1 year, it would be really a great, fantastic result. So there is a long range within which market should stay. But what if market really become unidirectional or wildly volatile? Then only we need to do some adjustments. And let me show you few very useful adjustments. If we see the case we have taken for understanding Iron Condor in our example, without any adjustment, the trade was giving around 2.15% profit on 18th of the month. It should be definitely booked here, but since we want to learn the adjustments, let us go forward and see what happens to the market. Since market has gone up and we are not booking our profit, we can shift the put spread up by 200 points. And if you see, with this, the max loss gets reduced to 2546 from almost 3500. Max profit increased to 4953. And now with this risk reward, it is much better than even 1:1 risk reward with which we started. So one simple adjustment can give us a huge benefit in risk reward also. And it is not that if I have taken my put spread up, then anyway I have created more loss possibility on put side. No, on both the sides of Iron Condor, maximum loss will remain 2546 only. And see, after a few days, if we convert the trade into iron butterfly, see the payoff diagram, it's all green everywhere. Whatever happens to the market, it cannot give any loss but will give some profit. That is the magic of proper strategy and right adjustment. And if you see the max profit, now max profit is more than 8,000 rupees, which is more than 10,000, although possibility of that profit is low, but otherwise wherever the market goes, this trade is not going to give me any loss. And if I'm a working professional, I need not do anything, either book my profit right now or I can wait till end to extract maximum profit. Will this happen to all the trades every time? Definitely no. There can be much more tougher situations for which there are few hard adjustments possible. We'll see in our upcoming videos if we can show some more adjustments. Let's do a small quiz. I want all of you to answer this question in the comment section. Why Iron Condor is a better strategy than short strangle? Would like to pin the best answer, and yes, there is more than one reason for this. We will be giving few pro tips to our silver members. Click on the join button below this video to become our silver member. After Iron Condor, calendar spread is another extremely efficient strategy. Leaving you with the video on calendar spread and its adjustments. Hit the like button and subscribe button. Download TOS app from the link given below in the description. See you in the next video. Thank you.